Well, good afternoon, everyone. It's 6 minutes past 3 here in the UK, and it's Wednesday, the 6th of April, and very hawkish speeches from several Fed governors have in fact sent the US stock market into reverse. We gave up 57 S&P points yesterday. We're down another 60 points today. Most of that was actually done in the overnight market. And as you can see, the number of shares on a buy divided by the number of shares on a sell in VectorVest has fallen through the floor over the last couple of days. The market timing indicator, which measures the underlying trend, is below 1, and that means the short-term trend is down, and it's down with some vigor as well. And the underlying trend is down, but the confirmed up signal that fired last week is still in place. So the advice, VectorVest does not advocate buying stocks at this time. So let's have a look at where we are. Let's have a look at the VectorVest composite. That's the VectorVest composite, folks. And after this incredible run up, we're seeing a pullback here, and we're getting around to an area where it should find some support. As you can see, the buy-sell ratio moving down into this 0.5, it's getting into a very oversold position. Got to get down to about 0.25 before I call it mega oversold, but it's heading that way. The MTI below 1. And we need to sit and wait for a bottom here before doing anything. I got stopped out of one position in a fairly dramatic style yesterday, that MATX. I'm still holding CCJ. I haven't looked at it this morning. The stop's in place, and I'm still holding the GDX. So the breakdown was quite predictable, I think, and I'm going to shift my emphasis now to the SPX, and on the SPX, folks, there's this big run up that we've had, and we pulled back. We're pulling back in 3 waves. We should see support coming in at some of these fib levels, but certainly there's no sign of that this afternoon. So just watch any open positions that you've got very, very carefully indeed. The jury is far from decided as to whether this is an impulse wave up or whether this is a corrective bear market rally. And if it is a bear market rally, we can get right down to these lows. Those lows were made a while back quite emphatically, and you can see the volume picture here much more clearly in my experience using the SPY, which is the tracker. And you can see there's the Wyckoff upthrust that I teach in the precision swing trading course. As you can see, the market came down here. This was in January, and that was one of the biggest one-day volume in this market ever. Then come right down to the same level. We had similar huge volume at that level. And then we made our way up, and what was worrying about that run up is that it occurred on falling volume. The market was running out of buyers as it moved up here. We took out this top, that's the Wyckoff upthrust, and then we fell. If you look at this day, we fell on rising volume, and then we rallied on falling volume. So this little pullback was quite predictable. Yesterday's bar was an outside bar, and we followed through it. As soon as London opened this morning at about 8:30 UK time, we were already off to the races on the downside after what those Fed fellows had said last night, putting up interest rates. I think a very probable place for this to stop, I can just use this line, would be this. So that's a level we need to watch in both the SPX and this SPY and the VectorVest composite for some support to come in. As always, I think that we needed a pullback after this run up, but certainly the strength of the pullback and the weakness and the breadth of the overall market is very, very worrying indeed. So it's not a time for long fishing trips. If you've loaded up on positions in the upswing, then you need to be watching those stops very, very, very carefully indeed. Okay, so let's go back to, and nothing has changed in the last few minutes, still down about 61 points on the S&P on the day. Nasdaq is down more. Clearly interest rates going up, half a point they say, tends to do long duration stocks an awful lot of harm. Long duration just simply means that you've got to wait for a long time before you get your purchase money back if something is trading on a price to earnings ratio of 100 to 1. Nothing to do today. In the UK, well, I haven't done anything. We had a very good day on Monday in the UK, and I had prepared to buy one position on Tuesday morning, but the general market sold off on Tuesday morning from the open, so I didn't do anything, and I certainly won't do anything on a day like this. So I'm still holding the same positions in the UK as I spoke about at Monday afternoon's Q&A, and that video is available. Anybody that wants it, just give me a shout and I'll send it. david.paul@vectorvest.com. A very, very weak day today, and shown categorically by this fall in the buy-sell ratio in the breadth of the market itself. So sorry I haven't got better news. Let's just sit and wait and see if this support down around here can hold, and we start to print a few green bars again. Okay. Thanks very much indeed. Bye-bye.